Anthony, thank you so much for your time today. I know you've got a lot of balls in the air right now. We really appreciate it.
Thank you for having me.
So I want to point out, by the way, too, that you were buying your shares the week after the SVB collapse. Just talk to us about that a little bit.
You know, I'm focused on the long term for our company. We think we're building the company that's going to be the winner that takes most in the digital financial world. We've built a very durable company that's a one-stop shop across all of your financial needs, and that's allowing us to gain huge market share. You know, we grew over 40% in revenue to an 8th consecutive quarter of record revenue at $460 million and 3rd consecutive quarter of record EBITDA. So the business is operating on all cylinders, and we're able to weather the storm that's out there because of our diversification and our unique approach. And so I'm focused on the long term, and when I see opportunities of uncertainty and investor concern, I want to make sure I express my confidence by putting my money where my mouth is.
Do you think that there's any sort of confusion in the marketplace about the guidance that you gave today or the commentary about, you know, kind of the weakness that you're dealing with?
No, what I'd say is we're in a very uncertain economic environment. We've seen a disruption in the banking industry that's obvious given all the news that you've been covering today, as well as what's happened over the last month. That's been layered on top of the fact that we've had record high inflation for the first time in several decades, in addition to the fact that there's uncertainty in the economy and global risk in Eastern Europe. There's a lot of uncertainty in the marketplace. So in many cases, stocks take 2 or 3 steps forward and 1 step back. And our performance is what we're focused on. And I can't think of a company that's on track to do over $2 billion of revenue and the type of profit improvement we're driving with 40% top line growth and just the diversification we have across so many businesses.
Yeah.
The only way you can drive 8 consecutive quarters of record revenue is that you have different businesses that can perform in different environments, and you have a management team that can allocate resources to make that happen. And that's what we're doing, and that's what we can control.
So what have the last 6 weeks been like since as soon as SVB and some of the others collapsed, the immediate question was, okay, direct exposure, right? You're out there in the marketplace first saying there's no direct exposure. Then you think maybe opportunistically, okay, here's how we can manage deposits if you're an uninsured depositor you're concerned about. I mean, you obviously saw deposit inflows. Just talk to us a little bit about being on the front lines right now of what our last guest just said is this customer realization of money is fungible. You can move it around. It's easier than ever. What's it been like business-wise the last several weeks?
Well, first and foremost, I want to emphasize for our viewers that we've added more than $2 billion of deposits in each quarter for the last 3 quarters. And we're well on our way to doing that again in this first quarter of the year. The disruption that happened in the marketplace gave us an opportunity to instill confidence, to build trust with our members, and to build trust with new members. The first thing we did was made sure that there was no direct impact on our business or our members' financial situation given that disruption. From there, we then said, how can we be more helpful? How do we increase the value proposition? And we made the decision within days to launch a new level of FDIC insurance of up to $2 million of FDIC insurance through a partnership with a third party. We are a national bank. We're also able to leverage our funding and our loan business to give a really attractive interest rate. We raised the interest rate to 4.2% on our savings account. We also have over a 1% interest rate on checking account. So we wanted to send a strong message that SoFi is a safe and reliable bank that you can put your money with. And not only that, we'll give you an unmatched value proposition in high interest, the ability to spend anywhere you want, when you want, and how you want from your mobile device.
So much more to ask. I guess I'll try to sneak in 2 quick final questions. The first one about student loans in particular. I think those payments are set to resume in the coming month or 2. Do you expect that to be a fill-up to the business?
What I'd say is we've achieved 8 record quarters of revenue in a row without the student loan refinancing business being robust. We're at about 1/4 the volume that we're at in the 4th quarter of 2019, right before the pandemic. If the student loan moratorium ends, there will be a pickup in student loan refinancing, but we're not counting on it. We have a diverse business, and the thing that gates our growth is how much we invest and where we invest. If that business comes back, we'll allocate resources to it to capture the opportunity and meet our members' needs. If not, we can reallocate other places and continue to drive our performance.
All right, quick final question is just about the Fed then. How much of a headwind is it to be operating a financial institution like yours into an incredibly high rate environment where the macro slowdown looks like it just could still take a couple more quarters to materialize? How do you remove that headwind, or do you just have to deal with it?
Yeah, well, the reality is you have to have an ability to allocate resources to the businesses that benefit the most. We're seeing a significant amount of demand in debt refinancing as rates go higher, and we're offering people the opportunity to do unsecured personal loans and to smooth those payments out over a lower amount over a longer time period. And when rates come back in, they could refinance them again. But in addition to that, we're trying to be really nimble as it relates to the interest rate on checking and savings to help people on that side of the equation as well. The reality is that we have a really strong balance sheet. We have significant growth in deposits at $10 billion, and that gives us a lot of optionality to help our members in unique ways when they need it.
All right. I know it was like 10 years ago you were at Twitter. It's still tempting to ask you about it, but you're out of time, and we'll let you go. And Anthony, thank you for joining us today.